10 things you need to know about stocks. What's up guys, welcome to my channel. If you haven't yet, be sure to be subscribed. It really helps me grow, thank you. Are you a Wall Street tweet? Snacking on 50 shares of Twitter for breakfast and out of the stock by lunch? This video is not for you. This video is for the average person trying to put a few dollars to work in the market or to take more control over your investments. These 10 ideas, tips and topics should be a good primer for your stock market education. They aren't all you need to know and won't guarantee success, but they are a good starting point for any investor. The number one tip is buy low and sell high. Sounds so simple, right? And yet investing is a rare part of our financial lives where things getting cheaper feels like a bad thing. Few consumers are lamenting cheaper prices at the pump amid the collapse in oil prices over the last year and a half. Yet a moderate market fall is treated as death knell for the bull market. These are facts that are not mutually exclusive. The current bull market will end, and over almost any long-term horizon, stocks have proven to be beneficial investments that generally grind higher. The second tip is that there is no such thing as a sure thing. Oil prices at $100 a barrel are here for the long haul. Alibaba is a world-beating juggernaut that can't be stopped. ESPN is immune to the shifting sands of the cable business, and its ability to mine money for Disney will never be in doubt. Just 3 examples of storylines once taken as gospel that have been shot full of holes. A word to devise: the conventional wisdom isn't always wrong, but it frequently has terrible timing. Some of the stock market's best investors over the long term, such as Warren Buffett, have placed their biggest bet on companies out of favor or during times of market stress. While long-term gains for stocks at large have historically been a safe bet, individual companies are inherently riskier. Number 3 is get familiar with filings. While some investors may think that have a sixth sense for finding good companies, the rest of us have to do our homework. There is no better starting point than the regular filing public companies make with the SEC, which are required to detail everything from company finances to potential conflicts and risk factors. The annual 10K includes the most information, ranging from quarterly and annual financial numbers to descriptions of business lines and management commentary on growth opportunities and costs. Regulatory filings will also detail any senior management changes, acquisition, and stock transactions by executive or board members. All filings for US public companies and foreign companies that list on US exchanges can be found online through the SEC's EDGAR system. Number 4 tips is think long term. Taxes aren't the only reason short-term trading is a loser's game for most investors. Trying to buy or sell shares based on a quarterly earning report or an economic data point is a game for automated trading platforms, not for the average Joe. Better opportunities come when a stock or sector is dismissed by the market and languishes despite steady economic results that will produce a long stream of profits. Transportation stocks like airlines and railroads have gone through long out-of-favor stretches, only to churn out considerable gains when economic conditions and industry dynamics align. Years of mismanagement in the airline industry led to a string of bankruptcies in the 2000s, but the resulting merger wave made American Airlines, United Continental and Delta Airlines more competitive and poised to benefit from trends like plunging fuel costs. Tip number 5 is dividends are your friend. Apple's share price dropped from $110 to $105 in 2015. That's an 11% decline, but investors who owned the stock all year just lost 3%. Why? Because Apple paid out $2 in dividends over the course of the year. Dividend-paying stocks aren't immune from declines, but they do offer a degree of insulation that others don't. A word of warning though, rich dividends that look too good to last often don't. Just ask owners of Kinder Morgan that in 2016 slashed its quarterly payout by 75%. Shark Tank investor Kevin O'Leary is fond of a statistic that shows the bulk of S&P 500's returns over the years have come from dividends, not price appreciation. That's why he says he will never own a stock that doesn't pay at least some of its profits out to shareholders. Number 6. There is no perfect metric. Professional and amateur investors alike have their favorite measures of growth and value, from price-earnings ratios to dividend yields and profit margins. But there is no single number that divides good stocks from bad ones. A stock that looks cheap at 10 times earnings can go to 5 times in a flash, and a flashy tech startup that looks pricey at 3 times sales can easily jump to 6 in a heartbeat. My number 7 tip is a $100 stock isn't expensive and a $5 stock isn't cheap. The price of a single share is not the right number to evaluate when deciding if a stock is a good buy or not. While triple-digit price tags might cost too much for new investor with limited funds, loading up on $101 stocks isn't necessarily a better strategy. Think of investing like grocery shopping. There is a reason you go to the store with a list instead of just deciding what to buy based on price tags. Tip number 8. Taxes can take a bite out of your profits. The FANG stocks, Facebook, Amazon, Netflix, and Google, had a great run in 2019, with returns ranging from 34% to 134%. But from a tax perspective, any investor who bought last year and eyeing to exit want them to keep climbing. That's because the 1-year mark is a line of demarcation for the taxman. Selling stocks you have held for less than a year triggers a short-term capital gain, taxed as ordinary income. That could mean kicking back anywhere from 25% to 39% to Uncle Sam. But hold those same stocks for at least 12 months and the tax rate drops to 15% for most tax brackets. Tip number 9. Know what you need and what you are paying for. The evolving brokerage industry is a beehive of competition to offer the latest and greatest trading option, but for most investors, the basic essentials can be found anywhere. Make sure you know the type of buy or sell order you are entering. A market order, for instance, will be executed as soon as possible, whatever the prevailing market price. A limit order, by contrast, will only complete the transaction within price parameters you have established. And the final tip, number 10, is take market news with a whole shaker of salt. The whole 2020 had no shortage of headlines, starting from the deep plunge due to the coronavirus crisis to surging unemployment rates. However, we have seen that the market bounced off its low. As an investor, the news flow driving day-to-day spiral in the market should be taken as interesting reading rather than a reason to make or change strategy. And that's it, guys. If you enjoyed this video, please consider subscribing to my channel. I really appreciate it. Bye!